close though. Negro. Alrighty. What? Someone said it. Someone said Someone said it. Bro, it was I'm sorry. I didn't someone typed out KNEE and then grow like GROW. But anyways, today's gonna be a mix of shit. So today is supposed to be psychology, and that's kind of what I plan on doing. But that's gonna be like the last 30 minutes. The first 30 minutes is going to be responding to the questions that you guys have on strategy creation. So, if you guys have those questions, write all of them out. Are we doing breaker blocks? No. I don't think that they are. I don't think that they're necessarily worth it to cover. So let's run all those questions that you guys have for the strategy creation. Okay. We're not doing trade review today. We're just doing like questions on the overall strategy. Tomorrow is going to be trade review. Okay, Connor, you can go ahead and pause it. Let's get started up here. So, let's see if this is a question that I can answer. On Tuesday, you started off bearish and switched bias to bullish. What do I look at to determine to switch my bias? As you said before, you're not really supposed to switch bias. Yeah, that's something I would recommend against you guys doing, so I don't necessarily want to teach you guys that. Because then you guys are just going to flip-flop bias back and forth over and over and over again. And that's going to cause for over trading, emotional trading. It's not going to be good. Can you make us a step-by-step plan for daily bias? We literally did that in the strategy creation one, but sure. I'll write it out again because Lesno was too busy playing Fortnite and didn't want to freaking pay attention in class. It is what it is, man. What should I have expected? Okay. Daily bias. We look to see if we are in a premium or a discount. How do we look at that? Well, we just look at the overall trend. If we see that the overall trend is up, okay, are we like up after an extension? Has market extended? So we need to seek out a discount. So in turn, we would be bearish. Or are we in an uptrend and we're already within a discount, so we can be bullish? Okay? That's like, that alone is like, that is how I find daily bias. Like today is a perfect example of that. Like this is literally it. Are we in a premium or are we in a discount? Like today, we take it from this swing low up to this swing high. We're in a premium. We're way above discounted price range. So, in turn, what was I today? I was bearish. The overall time frame, or the overall trend is up, but why can't I be looking for longs? Because we haven't came down into the discounted price range. That's like as literally as simple as I can get in terms of daily bias. Fuck breakers, I ain't gonna lie. Yeah, if you want to use a breaker, just use an order block. They're both gonna get formed. Where does SMT fit into strategy creation? I'll show you an exact example on it today. Today I was bearish because of the reason that I just showed you. Let's go ahead and draw out, market open. We have this high right here on NASDAQ. This high right here on NASDAQ, so a high, then a higher high. We have this high right here on ES, boom, and then this high right here on ES. So a lower high on ES, but a higher high on NASDAQ, confirming the bearish bias. What else can we look for? Well, we disrespected both of these bullish inverse fair value gaps. That's what I took my trade off of today. I did not understand when you wrote down the strategy at the end of last call. It is very different from the one you are teaching on the trading transformation. Can you go over it again and write it down on paper step by step? That's exactly what we did last class. The examples you're giving are kind of chaotic and hard to understand. We'll do another example. Okay. How do I find daily bias? I look at the overall trend, uptrend. Are we in a premium or are we in a discount? Premium. Where do we want to go? Discount. In turn, I'm bearish. Boom. Daily bias out the fucking way. Now what do we want to look for? A high confluence price range for us to find shorts. How do we find a high confluence price range? Well, we start looking for confluences on our semi-low high time frame. Today, what did price do? Well, we swept liquidity. We broke structure to the downside. We made an SMT divergence. Boom. We're looking for shorts after we see that. A sweep of liquidity, a break of structure, SMT divergence. I'm going in. Okay, perfect. We found the high confluence price range now. Now what are we looking to do? We're looking to execute. How do we execute? We look for our confirmations and we look for confluences. So, confirmation, well, right here, right after the SMT, we have this bullish imbalance that gets, boom, confirmation, broken, as well as a break of structure. Then what do we have? A bearish fair value gap that gets filled and rejected out of. You can short either off this. Okay, and then where do we target? Draws on liquidity. So how do we find our daily bias? We look at premium or discount. How do we find high confluence? The step-by-step goes like this. Bias. High confluence price range and execute. How do we find our bias? By looking at premium and discount. Cool. Once we've established the bias, we look for a high confluence price range to execute based off of our bias. So we're going to be on like the 15-minute. In today's case, we had a sweep of liquidity and then a break of structure and also an SMT. That's like dead fucking obvious time to start looking for shorts. And then execute. How do we execute? We look for a confirmation and then a confluence. Confirmation is either inverse fair value gap or a break of structure. And then our confluences, you guys already know those. Order block, fair value gap, equilibrium. Okay? These three. That's it. Can you explain scaling down more and give more tips for it, like when we can scale down? I think I did a pretty good, I think I explained that right now. When do you switch bias? We're not talking about that because you guys would be switching your bias literally every 5 minutes if that were the case. The best thing that you guys can do is establish your bias, don't switch it, and if you're wrong, figure out why you went wrong. Because more often than not, you guys are not going to be good at finding your bias when you guys first start doing this. So the best thing that you can do is learn how to establish your bias really good first, and then you won't even have to think about switching biases. How do you draw the equilibrium for bias? Man, a lot of these questions were answered and could be answered purely just by you guys going back and rewatching the recordings, guys. Kind of disappointed. I am not going to lie. Equilibrium from bias, we take the range low up to the range high. Okay, so the low before price started making its up move, and then we take it to the high from when price starts making its down move. Same thing here. The low prior to the up move, the high when it starts making its down move. Okay. Is it fine to use equilibrium on 1 minute time frame? Yeah, but I wouldn't say that that's like a super bomb, insanely awesome confluence. Okay, if an inverse fair value gap level is within a fair value gap that is higher confluence, okay, if an inverse fair value gap is within a fair value gap that is higher confluence, in your opinion, I'm sorry. If an inverse fair value gap level is within a fair value gap, is that higher confluence in your opinion? Oh, I see. I mean, I guess that happened today. Where was it? It was on NASDAQ. Yeah, this inverse fair value gap right here. Right, we close underneath it, and then we have, boom, this bearish fair value gap. I wouldn't necessarily say that it's higher confluences, it's just two confluences within the same price range. How did you switch bias the other day? We're not going to talk about that. Can you do a lesson on entering trades? Were you gone last class? It's literally everything that we talked about. We talked about all of that yesterday. Or not yesterday, 2 days ago. I understand ranges for the most part, but can you do another quick example? Ready? We'll show another example on some shit that happened today. Okay, we'll use the NASDAQ example. Where's the range high? The high before price started going down? Right up here. Where's the range low? The low before price started coming up? Boom. Right here. What do we see price do? Come up into equilibrium, fill this imbalance. Bias, overall bearish for the day. How could we have taken a trade off that? Scale into the 1 minute time frame. Start looking, okay? We're looking for either break of structure or a bullish fair value gap getting invalidated and turning it into an inverse fair value gap. Boom, we get a break of structure right here. Boom, we see a bearish fair value gap get formed. We push in, we reject it, shorts off that. Stops can even be above this fair value, or yeah, like above the 50% mark of this fair value gap if you want. Target draws on liquidity. Liquidity here, liquidity here, liquidity here, liquidity here. What is the best time frame to find draws in liquidity?
Price is fractal.
There are draws on liquidity on every single time frame. So again, when you ask me what's the best time frame for something, there needs to be way more context for that. Okay, because if you say what's the best time frame to find draws on liquidity, there's draws on liquidity on every single time frame, so all of them are the best, right? Is it what time frame is the best time frame to find draws on liquidity for daily bias? What time frames are the best ones to find draws on liquidity to execute off of? What time frames are the best time frames to find draws on liquidity for take profits? And then at that point, we're talking about being individualistic with our trading strategy. So you guys should be wanting to find the best time frame to find draws on liquidity for your own strategy. Why don't you use the strategy that you posted on the trading transformation? This is very, very insanely similar to the trading transformation strategy, just scaled down one time frame. A lot of people be thinking that this is like some extra special non-trading transformation shit. It's just, instead of executing on the 5 minute and the 15 minute, I'm executing on the 1 minute. Price is fractal. All right, open chat up. We'll answer a couple more questions and then we'll get into psychology. Said, why are people so fucking dumb? All right, pause it. All right, here. After a high time frame liquidity sweep on the 4-hour, do you prefer to enter on an order block or wait for a leg down, then a retracement to a fair value gap? There's no, okay guys, this is something I really fucking need you guys to understand. There's no such thing as a better confluence than another. There's no such thing as my favorite entry model. There's no such thing as my favorite time frame. There's no such thing as the best time frame for draw and liquidity. There's no such thing as best confluence. There is no such thing as that shit. Okay, so it's not about preference. I execute based on what's given to me. So when you're asking, do you prefer to enter on an order block or a fair value gap, it's whichever one gives it to me. You're asking, which one do I see more success with? It's literally, it's not which one I see more success with. It's what works for you. Also, what time frame do you prefer to use when looking for your take profit liquidity? Again, all of this shit, you guys need, like, look, if I'm a swing trader and I'm executing on the 4-hour time frame and I'm using the weekly time frame and the daily time frame to establish my bias, maybe I'm entering on the 1-hour time frame. The draw and liquidity that I use to look for take profits is going to be way different than if I'm executing on the 1 minute. So it matters on what type of trader you are. If you're going purely based on how I take trades, I do it on several different time frames. I'm looking at hourly draws on liquidity, 4-hour draws on liquidity, 15-minute draws on liquidity. Again, stop thinking that there's just a plug in fucking play. If that shit were the case, then all trading bots would fucking work. The way that you guys are thinking about this shit right now, you guys want some super, like, step 1, step 2, step 3, step 4, step 5, boom, in and then fucking out. If that were the case, then everyone would be fucking profitable with trading. Again, the very next question. If I charted highs and lows on the 15-minute and it doesn't break of structure, but it does on the 5-minute, how would you go about it? Like, there's no context to that shit at all. There's no context to that. Look, we just broke structure on the 15-minute. And is there any context? Is there any bias with this shit? No? What? Okay, and then what happens if price immediately breaks structure to the downside? What do I do? It's just fucking price right now. What's your bias? What's the context? Okay, where do you want fucking price to go? What's your daily bias? Like, holy shit. Where do you want price to go? You literally just asked me, if there's highs and lows on the 15-minute and it doesn't break structure, but it does on the 5-minute, then what? Like, did I not just explain, like, literally 5 times, if not 20 fucking times, our last class on how to find our bias, how to find a highly executionable price range, and then when to execute. And then today I just did that shit over 2 more times. And we're talking about what time, like, bro, it's like I haven't even been teaching you guys for the past month. We use what is given to us based on our bias. Sometimes fair value gaps on multiple time frames. Here we go. Sometimes fair value gaps on multiple time frames, like the 5 and 15-minute. What time frame should we draw the fair value gap, or both? And look at it as a zone where we look for confirmation. Again, purely depends on what you are looking for. Remember our first day, our day right before we started talking about confluences, where I broke down how you guys are going to be trading completely differently than each other. And I'm just going to show you guys how I trade, and you guys can use. And remember, I told you guys on the confluences, price is fractal. This shit happens on every single fucking time frame. So on the 15-minute, what is there right here? There's an imbalance. Cool. On the 5-minute, there's also an imbalance. Okay, well, how do we make sense of that? Well, there's an imbalance on both the 5-minute and the 15-minute. What can we use to our advantage in that case? Premium and discount. So we know, hey, look, there's another 5-minute fair value gap right the fuck here. Super small ass fair value gap. So why wouldn't we go short on this? Because we need price to retrace to a discounted price range before looking for more shorts. So that cancels that out, and then boom, what do you know? This 5-minute fair value gap is the exact fucking same as this 15-minute fair value gap. Y'all got to stop sucking off time frames. Stop it. It's making me pissed off. I swear, there's a reason why I did that class on confluences, and this is the first mastermind that I did this shit because it happened the last time, and I guess we didn't listen hard enough. Are we stupid? No, we're just learning. Everybody's stupid when they start. I don't like repeating myself, that's all. Because if I teach something once, then I assume that it's going to be processed, but sometimes that doesn't work. Are we doing stop losses? Stop losses are pretty self-explanatory. Where to place stop losses when your trade idea gets invalidated. Okay, so let's say, see liquidity sweep, break of structure. We have an order block, price comes in here, boom, break structure off that. Okay, we enter right here. Where would our trade idea get invalidated? What are we taking the trade based off of? Based off the liquidity sweep, what was the confluence, order block, and break of structure. I'm putting my stop loss above the order block because that is the confluence that I'm taking the trade off of. Same thing, if I see high time frame, my bias is bullish. I see price in an uptrend, we come into a high confluence fair value gap. We invalidate a previous bullish fair value gap, boom. Let's say I enter here. Stops underneath the fair value gap because that's what I took the trade off of. That is my high confluence price range. How do you set up runners on TradingView? Assuming that you're going to be executing multiple contracts instead of closing, like let's say you enter on 3 contracts, instead of closing all 3 of them, you only close 1. And maybe you only close 2 and you let 1 run. What do we do when we are in a consolidation hurdle / near equilibrium or other high time frame confluences, not sure where the daily bias is going? Consolidation hurdle / near equilibrium. Okay, so like what? Like this, for example, consolidation. If you can see that we're obviously in consolidation, the best thing that you can do is just scale down onto a lower time frame and then boom, mark it off based off that instead. Okay? So like here, let's see. This, for example, prior to this, we see that we're chopping around a lot, right? This is pretty much consolidation. Okay, so what can I do prior to all of that? Well, if we're chopping all around, we can look at a couple things. Okay, we can see, all right, we have this range high down to this range low. Okay, but then, we invalidate this bearish imbalance after wicking through it for the first 15 minutes. Then boom, macro hits, we rip through it. So then what? Okay, now we're breaking structure to the upside. Cool, this range low up to this range high, boom. We come in to discounted price into this fair value gap. We can look for executions based off that. Okay, we can see in here we have an invalidation of this bearish fair value gap. We also break structure off this candle right here. Okay, draws all the way up to here, all the way up to here. Can you explain why we had a contract switch today? What is it and how does it affect other indexes? It doesn't affect indexes. Contract switch is literally just when contracts switch over from the previous month to the new month, and it causes a gap within the chart. Can you go how order blocks are the move before a leg down or before a leg up or leg down, not just before liquidity? That's I'm pretty sure you just explained ICT's version of an order block. That's not how I teach order blocks. So, you want to learn from me? I teach order blocks, not that way. You want to learn from ICT? You can learn the other way. I think there's way better confluences to use than in-trend order blocks, in my opinion. Did you count today's pre-market as a liquidity sweep at 7:30? Didn't happen on NASDAQ. Tell you that much. And it didn't happen on ES either. What liquidity sweep are you talking about? If you're talking about this 1 minute action, that is just purely a retrace, brother. That shit is just retracing down into this imbalance. Gold zone Fibonacci. If my setups happen before news, do I take it? It worked today, but 0.33 RR. When the fuck were you trading? Were you trading before PPI? Before pre-market was even open? best time to trade is from 9:50 and beyond that, from 9:50 to 11. And if you haven't found a trade then, I would just pack that shit up. Why was there no retrace to equilibrium? So right here, you mark this shit out perfectly, by the way. Good job on that. What time frame was that on? Or my guess is, I think it was ES. Look right here. It's always going to get there eventually, man. SMT divergence happening right now, actually. Right here, higher high on ES, lower high on NASDAQ. Okay, so it's always going to find its way up there. Right here on NASDAQ, we have these highs right here, down to here. Fill in this imbalance. Boom, we're making moves. Now, these range highs, down here. Boom, fill in this imbalance. Now we're making moves. Okay, on ES, boom. 15-minute imbalance. We finally fill equilibrium. Boom. We're making moves. Okay. Do you spit on it first? Jeez. You talk about news and trading. Yeah, so for me, really, the main news that I really try and avoid is going to be CPI, which happened yesterday, PPI, which happened today, FOMC, which happened yesterday, and NFP, which happened, I believe, last week or a week or like 2 weeks ago. Okay. And I personally am just not in trades before those. Okay, today I traded on PPI. Yesterday, most of the time these high impact news events, they won't give you, they won't really give you optimal times, like good trade entries anyways. Like yesterday, CPI was pretty bad, okay? But for spacing out, for PPI, in this case, where was it? Boom, it was just this candle right here, just this up candle. Right, versus this was CPI. So CPI didn't really offer us much because we just continued higher and higher. But PPI, if this is the only candle, then boom, I'm fully ready and able to trade that. Okay, so I've been using the Forex strat for Forex, and I keep seeing future strat play out. Should I switch over? Again, purely up to you. If you see that shit playing out more often than not, and you know it's something that makes sense to you and makes sense on why you execute, then yeah. What time do you recommend trading on if you can't do the morning? Either PM session for indexes or London session for Forex. That's what I would do. All right. I think we're going to put a little pause on think we're going to put a little pause on the questions for now because we're going to be doing trade reviews tomorrow. So again, make sure you guys are saving all the trades that you guys have been taking this week so we can review them and make sure you guys are marking down why you entered, okay, why you exited, what you did right, what you did wrong, all of those things, okay? Now, give me 1 second. Okay, someone just asked how to take profit at all-time highs. I made a TikTok on this. Use the Fibonacci tool, okay? The extensions are -27, okay, -0.5, -0.9, -1.9. That's how you TP at all-time highs. That's how you do it, man. Dun, 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 dun. All right. We can't do any more questions. We got to do the psychology. Okay, let me pull this right back up. Alrighty, folks. Okay. Don't have much time here, but again, we need to remind ourselves of where the fuck we started with this shit. So, psychology day one, what were our main pain points? It was risk management, psychology, and a lot of you guys think it's strategy, and guess what all the questions were about today, even though I know that it was like mainly focused on strategy, all you guys are asking, time frame this, confluence that. Remember, most of this shit lies within your emotions and within your risk management. Okay, so again, when we're coming into trading, we need to be thinking about the markets in the right way, okay? Because again, the way that we think causes the way that we act. All right, and we need to remind ourselves of this because purely based on today, it seems like a lot of you guys are fucking panicking. So in turn, how are you guys gonna act within the markets? You guys are gonna fucking panic. Okay, and we don't want people who fucking panic in the market. We want people who are smart, who know what they're doing. Okay, so again, why do we need this? Because if we're approaching trading the wrong way, if we're thinking, how can I make the most amount of money in trading right the fuck now, we're going to get the wrong result. We're going to act that way. And when we act that way, it causes a bunch of bad things to happen. It causes us to over leverage, causes us to overtrade, causes us to freak the fuck out, causes us to panic. Okay, so again, there's only two ways to approach psychology. You do what you're supposed to because you know that will produce your results. Okay? Or don't do what you're supposed to and then you get unwanted results. A lot of you guys, I can tell purely based on questions, were fucking panicking within the market, boys. It's not what we're here for. If you panic, if you freak out, if you overcomplicate, you guys are going to get results that come from that. Okay, and again, we're here to avoid shiny object syndrome. So again, anything that is fast track to profitability, anything that is instant profit, 1000% win rates, anything that is too fucking good to be true, it's probably not true. Okay, so again, we have to reverse think about this shit and think from our end result back in time, okay, till when those actions start. The second you guys start thinking about making money in trading is the second that you guys failed. Okay? Now let's get into really the important one here. Okay? Which was day 2, where we talked about how psychology is the driver of action, and we have to know how we think, and by controlling how we think, we can control how we act. Again, what do you guys want to be doing? You guys want to be predicting price correctly. And again, based on some of the questions today, I can tell that we're kind of straying away from what we learned in these lessons. Okay, I want to skip through some of this. Again, this is all just like, we need to remember what we started off with. Because again, I told you guys this would happen. It happens with every single fucking mastermind. Whenever we do the first week of psychology and shit's all fucking fun and games and all super lit until I start teaching confluences, until I start teaching strategy, and then everybody thinks that that's it. Everybody thinks that, boom, that's the golden ticket. It's not. It's what's up here. Okay? And now because we struggled with it so much, we need to go back over this one. Okay. What are confluences? We're going to go through this slide by slide. What are confluences? Reasons for why price is going to move. So liquidity and imbalances and price ranges where orders get filled. They can happen everywhere on the chart. They can happen everywhere on the chart. Every single fucking time frame. There's liquidity sweeps, there's imbalances, there are confluences. Okay? Confluences are reasons for us to execute a trade. They give us high probability reasoning for price to go from its current price to the desired price. Price is fractal. The confluences taught can be applied on any time frame. Did we forget? Do not copy and paste what I do. Do what works for you. What happens on the daily time frame happens on the 1 hour. What happens on the 1 hour happens on the 1 minute. It just depends what time frames you want to act on. Are we seeing now how we forgot a lot about this lesson here? There's no such thing as the best time frame. Ever. There's no such thing. Personalize your strategy. You're not trying to copy and paste what I do. Notice, we talked about this. If you just copy what works for me, it won't work for you. Because it doesn't make sense in your head. I do what I do because it makes sense in my head. You guys have to put time in on the charts based on on just the overall strategy outline that I have given you and the confluences that I have given you to personalize your own strategy. Again, use the confluences that work for you and make sense for you. You build your own strategy off the confluences that I teach throughout the next week. Damn. It's almost like all of the fucking questions from today would have been completely useless and wouldn't have happened if we had remembered what we learned. Again, what are we acting on? We're acting on repetitions on the chart that happen daily. And that's what you guys base your strategy off of. I told you how the confluences affect price. Cool. Now it's up to you. Again, if you thought trading was just going to be this super easy peasy, like boom, instant money maker glitch method, again, I told you guys within the very first day that shit is not the case. You guys have to put in time on your own to use the strategies that I've given you, use the outline that I've given you to make your own strategy, and it's really not that difficult. It's as simple as figuring out what time frames you are going to look for daily bias on, what time frames you are going to be looking for your high confluence price ranges to execute on, and then you look for what time frames you want to execute on. And I've given you guys the confluences, I've given you guys the confirmation on how price moves on every single time frame, so it should be really easy to do this. Do you see how this is structured now? This was you guys today. You guys tried to implement everything and you started freaking out and you thought some shit was going to work and then it doesn't, and then you lose money because I know you guys probably... Some of you guys probably started risking money today like an idiot. Some of you guys probably bought a funded account right after you guys got the strategy, and then you guys fucked it up. You guys probably lost money because you were doing a whole lot of this, overanalyzing. Keep it simple, stupid. Again, I gave you guys the fucking method before you guys even knew what you were looking for. Again, I told you guys on week 1 that week 3, you guys would circle back and be like, God fucking damn it, he told me so, and here I am telling you I told you so. So again, what should you be looking for? How to find your daily bias day in and day out? What time frames and what confluences are you going to use to create your bias? How you're going to execute? What time frames and what confluences cause you to execute trades? How you exit? What time frames and what confluences cause you to exit trades for profit and loss? Again, it's based off of your choice of time frame, your choice of confluences, your choice of time frame, your choice of confluences, your choice of time frame, your choice of confluences. Why? Because price is fractal. Okay? And again, the second we can understand that, the way better off we're going to be. All right. So, again, I think a lot of you guys, it would be really beneficial for one, you guys to rewatch our previous lesson on talking about literally strategy creation, because it's like today it felt like I didn't even give that class. And then, on top of that, I highly suggest you guys rewatch this recording. Because again, it definitely felt like we didn't even do this class today. And I'm kind of disappointed because of it. That's one thing about me. I really don't like repeating myself, and I really don't like putting a lot of time and effort into something, especially like taking a lot of time out of my day going over literally like a bunch of shit, and then a week later, me getting questions that completely contradict what I talked about a week before. It's not necessarily a fun thing to see. All right, so with that being said, that wraps it up for us today. Okay, tomorrow is going to be trade recaps. All right, and trade reviews. I need you guys to be locked the fuck in. I need you guys to have your guys' trades already ready with your reasoning and with your bias and why you entered them. Okay, and we are going to go over them. I don't want something that is literally just some bullshit that's just like, oh, I took a short here and it's literally like super zoomed in on the 1 minute time frame and it's like, why did I lose? Okay, I really don't want to see shit like that. All right? But with that being said, I appreciate you guys. Today was a rough little day. All right, I knew this would happen though. This happens with every fucking mastermind. Don't be feeling bad for yourself. I gotta figure out some sort of fucking way to make sure this doesn't happen next mastermind, because I might lose my shit if this shit happens again. But anyways, I appreciate you guys. We'll see you guys tomorrow. Good luck trading tomorrow. If you guys end up taking a trade, bring your trades ready to go with your confluences. All right, guys, I'll see you guys tomorrow.